first, this decision, do you first of all agree with the Bank of Ghana that this is the way to go?
Yeah, I absolutely agree with the Bank of Ghana on this particular one, reducing the policy rate by 150 basis points from about 15.5% to 14%. Now, to begin with, as we all know, the policy rate is the signal rate that the Bank of Ghana sets. If you think about it, the Bank of Ghana is the bank of bankers. And so where they lead, all the other commercial and other banks in the system follow. So typically the Bank of Ghana will set a policy rate, and that becomes the benchmark rate that other commercial banks would then come off. So when they reduce the policy rate by say 150 basis points to 14%, then other banks can then take that 14% and add their other unique bank risks onto that to be able to probably lend at that rate. Now, what it effectively means is that if a bank, for example, let's put arguments, say there's a particular bank that is so ideal that it lends money to customers at Bank of Ghana's policy rate. So if that bank was lending at 15.5%, say last week, because the Bank of Ghana policy rate was 15.5%. Now that the policy rate has come down to 40%, it means that that bank could also follow suit and lend to Ghanaians at 14%. What that means is that the cost of borrowing to Ghanaians comes down. So if you're a business that was looking to borrow 100 million cedis last week, and you were going to pay 15.5% on it, meaning your interest would have been 15.5 million. Now, Bank of Ghana has effectively reduced your cost of borrowing by bringing the rate down to 14%, meaning your interest will now come down by 1.5 million down to 40 million. So this is yet another tool that the Bank of Ghana is using to try and support reduced cost of borrowing in the market so that the industries that we want to grow can borrow from banks and be more competitive, if you like, be able to produce for the market at more competitive rates. So I agree 100% with them. And the reasons they gave are very, very sound. Of course, there are various pressures. If you look at the last 2 months, our government's debt profile has reduced. You'd see over the news recently, it has reduced down to about 646 billion thereabouts, which is welcome news. You'd see inflation is on a downward trajectory. Inflation as of February was down to about 3.3%, compared to, if you like, last year, January was around 23.8%. So we've shaved over 20.5% of our inflation rate. And so when you look at all of this inflation coming down, it's only logical that the Bank of Ghana would also drop the policy rate. Bear in mind that one of the tools that you can use the policy rate for is to fight inflation. So when inflation is high, because probably there's excess liquidity in the system, too much money chasing too few goods, sometimes you can mop up that excess liquidity or too much money in the system by increasing policy rate or interest rates so that you can bring in the excess funds and bring inflation down. But now that inflation is in the right direction, I think it's very welcome news that the policy rate also comes down so that the cost of borrowing to the Ghanaian consumer and to businesses can also come down.
Well, while all these indicators may be looking good, one of the things we've seen in recent weeks that had led to people expressing fears about the future is what is happening in the Middle East. That conflict alone has led to over 16% increase in fuel prices. And you know the impact fuel prices can have on inflation itself. Should that not have been an indicator that the bank needed to be cautious in any further moves it makes in cutting interest rates?
Yes, absolutely. That should have been a factor. And there are many factors that the bank will usually consider when it comes to making a decision such as this. One of the factors, as you've rightly pointed out, is the geopolitical risk we're seeing now. That's the fancy word for the Middle East crisis or the war between Israel, US, and then Iran on the one side. You'll see that overnight it's actually heightened to the effect that the Israelis bombed the Saf Pass gas fields of Iran, where you have gas production facilities of both Qatar and Iran. And Iran, in response, also bombed the gas fields of Qatar and a few other countries. And so Yes, this is expected. And in fact, it has actualized, as you have said, my good brother. We can see fuel prices have gone up about 16%. But I think that the managers of the economy, the governor of the central bank and his brilliant team, they have factored this in already. So when you read the reasons for the reduction in the rate, they have assessed all of this and they have come to a conclusion that yes, we do have some raising or rising geopolitical tensions and risks at the moment that are feeding straight into this. But the overall view is that in the medium term, in the immediate to medium term, we are not expecting this to have an overly aggressive impact on headline inflation. And that is consistent with what most analysts expect. We do expect that this will be a short lived war. And then soon and very soon, things will probably calm down. Bear in mind, there's a feed through time, right? So what happens now takes its while to feed through into inflationary pressures. So they have priced that in. And I guess by virtue of pricing that in, that might have influenced them reducing it by 150 basis points rather than by 250 basis points or more as they have done in the past. So I don't believe that they are oblivious to what is happening. They've taken a look at those happenings. They've also taken a look at the overall health of the Ghanaian economy, our debt profile having come down, meaning that we have got a lot more debt sustainability. They've taken a look at fiscal policy, the contractionary fiscal policy that is going on, and they've taken a look at the current um, if you like, the current profile of the country. And I've said this elsewhere. Last week, I was on another sister station of yours, and I said, if there is a better time, we do not want this war because this war doesn't help anybody. From Ghana's perspective, a lot of the gains we have made from an economic perspective are being hampered or being jeopardized by this war. But Ghana has never been more prepared than now to shoulder such external shocks, right? We are so well prepared in terms of our debt profile. We've been able to bring our debt down to a very sustainable level in terms of debt to GDP ratio. We have been very prudent in our commitments. We have been very contractionary and prudent in our fiscal policy. We brought inflation down to 3.3%. So even if this were to lead overall to a 10-point basis, a 10-point increase in inflation, will be down at 13%, which is still over 10% cheaper than a year and a bit ago. So I think that they've considered all of these factors, but looking at the overall health of the economy, this Ghanaian economy is very, very much healthy. It's healthier than Abedi Pele in his heydays, if I use football parlance, and therefore is able to shoulder the impact of whatever has happened. Now, if you look at fuel price, for example, it's gone up by 60% on average, but that has moved from about 9 cedis, 90 pesos, now to about 12 cedis, 40 pesos, which is still at least 5 cedis cheaper than the 17 cedis that was there not too long ago. But we pray that it will calm down, the war will stop, and then fuel prices will pare back, and the inflationary pressures will also be subdued in due course. However, I think that, and reading from the report that supports the reduction decision, I think that all these factors have been considered, and the overall health of the economy and the trajectory we're heading still supports strongly this reduction in the policy rate. And I agree with it 100%.
But it looks from reading the story I just read, even the bank itself is still monitoring the situation and has indicated its readiness to recalibrate policy should global conditions deteriorate. Is that the bank telling us that if by tomorrow things get out of hand, they are ready to perhaps reconsider the decision they've taken yesterday?
Yeah, absolutely, absolutely. And if you look, central banks all over have all factored this in. So, for example, just this week, the central bank for the United Kingdom has also taken a look at this, and for them, they are a lot more exposed to what's happening than Ghana. And so they have taken a decision not to increase policy rates, but to maintain. So for them, they've factored everything in, and inflationary pressures were on the downward trend globally. And in the UK, for example, it's interesting to know that Ghana inflation rate is almost at par, if not better, than UK inflation rate now at about 3.4 versus 3.3 for Ghana. Now they have taken a decision to maintain and observe because they are a lot more exposed, particularly on gas, than we are. But a number of central banks have been a bit cautionary. However, for us, we have taken the view that one, the level of exposure is not as heavy as others. Two, where we are now, were in a so much better position than we were. If this was happening 12 months ago, 60 months ago, the decision would have been completely different. If you notice at the initial stages, the Bank of Ghana was quite cautious in terms of how fast they were cutting policy rates. They needed the right signals from the fiscal side, from Honorable Atufo and the Finance Ministry, and they've got those signals. And so that statement in itself also tells us that they factored it in, and it's part of all that's coming to a conclusion that all things being equal now, the trajectory should be a reduction by 150 basis points and not more than that. But of course, if the war continues for another month and things deteriorate, I am sure that at the next window, the Monetary Policy Committee will elect to either increase the policy rate to reflect the mood, economic mood at the time, or maintain it. But I think that reducing it and at the same time issuing that caution that they reserve the tools or the right to be able to change course if the economic environment so determines, I think it's in the right direction.
Mm. And let me conclude then by asking you something about UK politics. How popular is the decision of the Prime Minister, Keir Starmer, that the UK will not be joining the US in this particular campaign against Iran?
Very, 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 very popular. It's one of the most popular decisions that Keir Starmer has made. You will notice that in recent times he has been under a lot of fire. He's gone through his own scandal with Peter Mandelson and a few other lobbying scandals and has been effectively subdued. But his singular decision has received widespread praise across the Labour Party. It has received widespread praise across the country, I must say, because nobody wants this war. This is a war of choice, as is popularly said. This is a war that is optional. A war has no aims. And as you can see now, yesterday I was driving through the fuel pumps and diesel prices jumped up to as much as, if you like, it went really high to about 175 pence. To give you context, barely a week ago, diesel was somewhere in the neighborhood of 137, thereabout. So more than, if you like, 40p increase, 40 pence increase in fuel price, which is much worse than the situation we have in Ghana. So I think that decision was very, very positive, and many people have applauded him. The country's mood is that he made the right decision, and I personally think so as well.
And do you think a lot of us are right to be, at this time, worried about what this, like you said, war of choice, war that has no clear objectives, what impact it could have in the long run, especially considering that particular enclave, some of the major producers of oil are there?
Yeah, absolutely. Absolutely. We are all very much, and in fact, the Gulf countries saw this coming. They pleaded with Trump. They told him, listen, this is not something you want to go down with. You shouldn't be doing this. But I think Trump miscalculated, in my personal view. The miscalculation was the fact that Iran would not close the Strait of Hormuz, which they have done. The miscalculation was the fact that especially they are using assets like their gas plants, their gas fields, their oil fields, and their refineries. And Iran has obviously shown that they are willing to do that. And so I think that now the right thing to do is for Trump and the Israelis to come to the table and to back off and, allow diplomacy and negotiations to achieve what war cannot achieve. Because in the end, we are all the worse off for this. We are suffering. Fuel prices are going through the roof, and this is going to feed through on inflation. Trade has come to a standstill. You cannot trade with the Middle East at this point. I mean, shipping has effectively come to a standstill in those parts of the world, and that's not what the world needs. The world needs a lot more of trade, a lot more of joy, a lot more of peace, and very, very, very little of missiles, if any at all. So yes, we are all right to be worried that if this war carries on for another month, it's already been going on for 3 weeks, and we can see the massive impact it has had. You go to the US, fuel prices have jumped at the pumps, and I don't think that the Americans appreciate it. The polls in the States tell us straight away that this is very, very unpopular with many people. And I'm very confident that Trump, looking at the midterms coming, will do a complete 360 in the coming days. I did see yesterday he criticized the Israelis for attacking the gas fields, the Iranian gas fields, and said he had nothing to do with it and was not aware of it. I hope that this is the beginning of the end of this war, and that within the next week, hopefully, they will all get around to a ceasefire, if not a complete cessation of hostilities.
And it seems to be in everybody's interest if they did that. But thank you very much for speaking to us.
You're welcome, my brother, and have a good day. A good shout out to all the great and good of the NDC UK and Ireland and our great government in Ghana.
How much did you say the diesel was in the UK?
It was about 175 pence, so that's £1.75 in here. That's roughly about 40 pence. Now, if you take 40 pence and convert it at the current pound rate of 1.5, you can see where it goes. So just take 1.5 and multiply by 4.
Far higher than what
40
we are
pence.
seeing
You
here.
see how much? Much higher.
Yeah, far
much,
higher.
much higher. Yes, much higher.
Well, wish you all the best. Thank you as always for making time to speak to us.
Thank you, my brother. Thanks. Bye.
Mr. Conrad Dumbah is Chairman NDC UK Ireland. He's an auditor and accounting professional. Join us on the line, always speaking to us on these issues. He's of the opinion that the move by the BOG is the best move to make at this time. The BOG also indicated that they are watching the situation. If it becomes necessary for them to review this decision that they've made, they will do same. Nina was asking, did